Good morning, everybody. Hey, welcome to Wednesday. It is March 23rd. Hope you're doing well today. Markets, hey, gave back a little bit yesterday. It looks like they may be giving back a little bit more today. We'll look at that and more when Dave joins us up here in just a few moments. But before we do, let me just remind you again that we can't control what's happening in Russia. We can't control what's happening in our economy or what's happening in Washington, D.C., but you can control how much risk you have in your current portfolio. That's why we designed our core retirement design to help design the retirement you always dreamed of. Give us a call and let us walk you through our core retirement design and help you out. That's 863-382-0037. And with that, we got Dave coming up next.
105.7 Light FM. It's Leona Lewis. It's Morning Dave. We're at 8:40 here, 20 now before 9. Time check in on your money. What's going on with your IRA and your 401k? Yesterday was kind of a surprise. We ended up on Wall Street, and we weren't really expecting it, so we're happy with that. See if we can continue the momentum this morning. Let's go downtown, see how Phillip Statler from Statler Financial Services is doing. Phillip, good morning. How are you?
Good morning, Dave. Hey, doing well today. I hope you are too. We get halfway through this week, and man, the quarter's just on the other side of this week.
No, about darn time. I'm getting tired of the old quarter, but I got a sneaking hunch it's not going to change much come April 1st. Do you think?
Yeah, I'm thinking it's not. It's and my fear is it could get a little bit worse before it gets better.
Oh, you merry sunshine, what am I going to do with you? Setting the table this morning, you and I were kind of thinking yesterday morning as things were in the red or at least mixed, and we ended up with a positive day. Dow ended up 254 points. The NASDAQ up almost 2%, up 270 points, and the S&P was up 50 points yesterday. That was a little bit better than I think either one of us expected it. I'm looking at my futures this morning and thinking we might not be able to match that, but my first reaction looking at the news coming out this morning was mortgage applications. Searching for those, you found that we fell another 2% on mortgage applications. We are starting to scare people on interest rates, aren't we?
We are. I'm looking at the numbers, and we've got the 30-year now up to 4.5% from 4.25%. And that's actually a full percentage point higher than it was a year ago for the 30-year mortgage, was at 3.5%. So, yeah, I mean, I think we'll see somewhere I read yesterday that, home sellers are starting to realize that interest rates are going up, and it's putting some pressure on some pricing.
And when I do ads for my real estate friends, I always remind folks that relative to history, 4.5% is still pretty doggone good mortgage rates. But, you take that change up by almost a full percent over the last year, it does tend to scare people off, and it's put quite a pall on the market over the last year, hasn't it?
Well, it does, because let's face it, when people go and they start looking at houses, they have a budget, right? I can afford $700 a month, or $800 a month, or $1,000, whatever that is. And so interest rates affects that. So if interest rates are up, then the price of the house that they can afford drops. And that's what we're seeing now.
And eventually that all ends up self-correcting, because the houses ended up decreasing in price or flattening out as the mortgage rates go up. So eventually it ends up self-correcting. But for the moment, we're going through a little bit of a scare. Speaking of interest rates, we're going through a little bit of a scare right now, because an old scare that came up a couple of years ago is starting to rear its ugly head, the yield curve, where for a little while yesterday and for a little while this morning, we had a couple of short-term treasury bills that were yielding more in interest than the longer-term treasury bills. And that tends to scare a lot of economists and investors when we start paying more on short-term money than we do on long-term money. Is that something that's kind of raised its head on the investment market yet?
I've actually not seen any headlines that are even looking at that right now. I think there's so many other things that the markets are worried about that they're not really paying attention to that inversion right now, or it's not big enough or long enough for them to really pay attention to yet.
And there's probably the length of it and the size of it that hasn't yet. But when the 10-year is yielding less than the 5-year, generally the 2-year and the 3 years are ahead are not far behind. We're back up to a normal ordering of things, although they're pretty doggone close right now on the 5 and the 10-year Treasury bonds. But that always scares folks. And while we're talking about scaring folks or making them happy, the price of gas is always something that annoys all of us. Federal Reserve finally raising interest rates to fight inflation. So Congress says, hey, let's throw some more money at people. As much as the gas prices annoy me, we've got a couple of congressmen now that are talking about an energy rebate of $100 a month per head for a household until the price of gas goes under $4 a gallon. We're just in the process of trying to shake ourselves out of too much money chasing too few goods, and now we want to throw $400 a month for a family of 4 until the price of gas goes down.
Well, yeah, and let's face it, Dave, every state, every county, the gas price is different. So how in the heck are they going to monitor that and determine at what point is your state's gas over $4? Because in California, it's always over $4. I mean, that's just not a fair statement.
Yeah, it struck me as number one, really bad economics. As much as all of us hate the price of gas the way it is, we both know the problem that we've got as much as anything is all of the stimulus money that we pumped out when we needed to during the pandemic has caused us a situation where we got 10% inflation. So the Fed starts taking a little bit more money out of the economy with bond purchases going away and the interest rate increase. So what does Congress do? Flood the economy with more money. I mean, as much as I'd like to have that extra $100 a month, it's bad economics.
Yeah, you're right. It's terrible economics. And I mean, we're trying to dig out. We don't need more stimulus. We need to get our balance sheet in order. We need to get inflation under control and then move forward from there.
Yeah, if you want Bullard, Paulson, and the Fed to start talking about full percentage point increases in the next Federal Reserve meeting, let's just throw an extra $400 a month into everybody's pocket and watch the inflation rate go crazy.
Yeah, exactly. I mean, we've already got it going up, and we would like it to go the other direction.
Absolutely. We're into, and you and I have talked about this all week long, we're into kind of tidbit time right now, because when you get into the middle weeks of a month in which we're not in the peak of earnings season, things are a little bit on the quiet side, and there aren't any government reports of any great size to come out, except we do have a new home sales report this morning at 10. Kind of the tail end of earnings season. A couple of household names are out there this morning, though, including General Mills, big G, little O.
That's right. So General Mills did report, and they had better than expected earnings, and they raised their full year outlook. So good things for them. They beat by 6 cents a share. Revenue wasn't a huge beat, but it was up a little bit. And so good. Here's their deal. They continue to see demand for at-home meals continuing to be elevated. So people still aren't going out to eat as much as they did pre-pandemic. Now, there's probably several reasons for that, but that's benefiting General Mills. They're up 3% this morning.
That's, if I remember correctly, we started to hear some guidance about how off-brands are competing with the mainline brands favorably, and they've got some price competition. So beating the street for one of the two major producers of cereal is probably good news.
I think so. It is definitely good news. Then we had Winnebago. Now, Winnebago, they had a good quarter. They beat by about 20 cents a share. So they came at $3.14 a share. Revenue top forecast. Still high demand, higher prices. So they've been able to get it and doing well. However, they are trading down today. And nothing in the report gives us any indication as to why, but they're down about 1.8%. My assumptions is that interest rates are going up, and that's going to hurt the RV industry, right? I mean, if you nobody usually goes in and pays cash for that RV, they finance it. And if interest rates go up, then that's going to hurt that industry, because that means the prices are going to go down. And so that's going to be an issue for not only Winnebago, but the other RV manufacturers.
Makes sense, and you got to assume that recreational vehicles are an elective purchase. So while it may not kill the car industry because we got to replace our cars, doing auto loan rates at a $50,000 or better RV, that does make you sit up and take notice, doesn't it?
Yeah, it does. And let's remember, RV rates are a little higher than auto rates. So,
Yeah,
yeah, in general, that's going to push us up a little bit more. And the other one
not
I
quite.
have for you,
That's it. Not quite as many incentive rates out there for RVs as there are for cars.
that's right. That's right. So, hey, the other one I have for you is Adobe, the
Hmm.
famous PDF maker, and they do a lot of other things when it comes to creativity and the artsy part of the world. And so they beat by 3 cents a share. Revenue was just a little bit above estimates, but they're really getting hit this morning because they cut their forecast for one of the key subscription measures that they have. And that's expected to hurt them, as well as get this, a $75 million hit for existing business that's in Russia. And so that's, because everybody's on a subscription. And so that's going to hurt them in Russia. Their Adobe's trading down today, $3.10. I'm
I
sorry,
didn't.
3.1%.
I didn't realize they were that big in Russia.
Well, I'm
My
sure that they're talking about a $75 million hit to their revenue stream on subscriptions.
good heavens, must probably explain some of the payloaded malware I get off of them all the time.
Hey, the last one I have for you is
overly happy with them to begin with. What's the last one?
Poshmark. Poshmark is they sell new and used clothes on their marketplace. And they're trading down today. They give weaker than expected guidance. Even though this quarter they had better than expected revenue and they didn't lose as much money as everybody thought. But that guidance is really getting them today. They're down about 9% this morning.
Oh, my Lord. And just to add into the lack of merry sunshine this morning, something I forgot to mention earlier, you dug up something that on the petroleum front, we could be running out of diesel before long, huh?
Yeah, this one, I hate to be the bearer of bad news all the time, but this one really caught my attention because we talk about oil all the time, but this one's talking about specifically diesel. That there is a shortage of diesel around the world because Europe, we use a lot of diesel, but Europe, it uses a lot more diesel than we do. And so they're talking about there could be shortages, there could be rationing, and the likes of that. And one of the energy traders said gas stations will run dry. So a little bit of worry there because we just don't need that with our just in time inventory orders, which are struggling anyway because of the supply chain right now.
I was just thinking if that problem crosses the pond, I got a couple of friends who drive truck. Well, they'll be just thrilled to death with that news that they'll have trouble finding diesel.
Yeah, and this, I don't know who does this one newsletter I'm looking at, that's quoted in this report, but they've been talking about this since February 8th, that there's a issue with diesel.
That's not to say we weren't forewarned then. Resetting the table up day yesterday on the indexes, 45 minutes before we opened this morning, Phillip. What are we looking at?
I wish I could find you some green ink over there, but I just can't do it right now, Dave. We got the Dow down almost 0.5%. We got the S&P 500 down almost 0.6%, and then we've got the NASDAQ 100 down almost 0.9%. So everything is really in the red until we get to the commodity side of the fence. Silver's up 0.7, back over $25 an ounce. Gold is up 1/3%, still down below 2,000 at $1,927 an ounce. And crude oil is taking a huge jump this morning, up 3.6%, right now to $113 a barrel.
Which is probably contributing to the indexes being off. Looking overseas, Asia followed our success from yesterday, and the Asian rim markets were uniformly up yesterday at the close this morning at 6 a.m. The British markets, the French markets, and the German markets are looking at our futures. The British and the German markets are all trading down this morning, and I really am going to have to do some research what the French are doing because they're up big time midway through their trading day. Keeping tabs on what's going on with one's retirement, don't do it day to day or you'll go crazy. Have a plan. getting that plan takes a pro. How do I get a hold of you to make that plan for mine?
Dave, that planning is exactly why we invented and created the core retirement design, so that folks can design the retirement they always dreamed of. Give us a call at 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730 and 95.3 FM.
And back here again tomorrow morning about the same time. Phillip, thank you so much. Enjoy. I appreciate it.
All right, man. You have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I, again, hope your week's going well. If we can help in any way, please don't hesitate. Give us a call. Check out our website, statlerfinancial.com. Join us again tomorrow morning, same time, same place. Until then, have a great day. Bye now.